What is up, YouTube? Welcome back to the channel. This is Broke Man Finance and my name is Adam Wilson. I'm actually on vacation this week in the beautiful Outer Banks located in North Carolina, and this is a big week because of earnings, but we're going to talk about one particular company. Tesla has been the talk of the market the past few weeks. They're always doing something, including selling little red shorts, which if you would like to buy me a pair, then by all means send me an email and I'll let you know where you can send those. But this past week has been especially chatty. Will Tesla make it into the S&P 500? Will they split their stock? What is a stock split? Are their earnings going to be positive? Are their earnings going to be negative? We're going to talk about all those things and explain what they are if you're not familiar. But first things first, please like the video and consider subscribing. Look, I'm on vacation right now. I'm sitting in my car. It's early in the morning and I'm still trying to bring you some value. So with that being said, if you could just do me a solid and smash that like button and give us that sub, we'd really appreciate it. Now, let's get into it. The S&P 500 is the 500 biggest companies in America. It's actually a few over 500, but approximately 500. Fun fact of the day, the S&P actually stands for Standard & Poor's. Henry Poor was a 19th century financial analyst who compiled an annual book that listed publicly held railroad companies. His publication merged with the Standard Statistics Bureau in 1941. 500 is the number of companies that comprise the index, and thus the S&P 500 was born. Tesla is not currently in the S&P 500, contrary to popular belief. To be in this club, you have to meet certain requirements. 1. The company must be headquartered in the United States. Tesla is, of course, headquartered in California. 2, the market cap must be $8.2 billion or more at minimum. Tesla, with its recent surge, is now boasting over $280 billion cap. For comparison's sakes, that makes them bigger than Coke, Disney, and Toyota, and actually would make them bigger than 95% of the companies in the S&P. The public float must consist of at least 50% of outstanding shares. Tesla's public float right now is around 80%. Now, next is what makes this week, tomorrow actually, such a big deal for Tesla. A company must have 4 quarters in a row of positive earnings, or at least the sum of positive earnings. This would be Tesla's 4th quarter of positive earnings if they get it. However, a lot of analysts are expecting them to be in the red this quarter, but no one beats analysts and surprises the world quite like Elon Musk and Tesla. Number 5, the stock must have an active market and trade for a reasonable price. Now, what is considered reasonable is going to be relative to the individual investor. While you may think it is a reasonable cost for the value of that company, I may think that is overpriced. This being the reason Berkshire Hathaway Class A is not in the S&P 500, but Class B is. If you're not familiar with Class B and Class A of Berkshire Hathaway, by all means, go look it up. If you don't believe me, Class B right now is trading for approximately $190. Class A, on the other hand, is trading for a easy, very modest $286,000 per share. Warren Buffett refused to split Class A stock, so he came up with Class B. But we'll talk about what a stock split is in just a moment. And after all these requirements are met, there's a committee that meets on the reg, and they vote in and vote out companies. And this group is consistent of people much smarter than myself when it comes to the market. If Tesla posts positive earnings and they meet all the other requirements, it will be up to this committee to vote them in. This isn't just like an automatic thing where once you meet the requirements, you're automatically placed in the S&P 500. That's not the way it works. There are companies that get voted in and voted out all the time. AMD, for instance, who is the second biggest developer of microprocessors in the world, was voted out in 2013, back in 2017, and last year was the top company as far as rate of returns in the S&P 500. All right, let's move on to stock splits. A stock split is exactly what it sounds like. The stock splits. For example, let's say that Elon and Tesla ended up doing a 10-to-1 split. And let's say that their share price was approximately $1,500. Now, let's say you owned one share. We're going to say a lot of things. And you owned one share at $1,500. Well, now, since the 10-to-1 split happens, you would now own 10 shares at $150 each. You didn't lose any value. They just took that one share and divided it up. Why would a company want to do a stock split? Well, it actually opens up the accessibility to the company for especially younger and newer investors, because they have a smaller entry point at $150 to get a piece of that company than they do at $1,500. Obviously, $1,500 is harder to achieve and get to than $150. And also, there's a lot of risk that may come along with somebody spending an entire $1,500 on just one stock. Unless you have fractional shares, which you can get, and there's a link in the description box below. By all means, click that link, sign up, you get a free stock, I get a free stock. It's a good day. Elon recently said that a stock split was actually a conversation worth having, but he wanted to have that conversation at the next shareholders meeting. My personal opinion is, if they did split the stock, you would see that company's cap continue to rise. Depending on the split amount, it would obviously lower that amount, making it easier for people to invest. Now, right now, there are 430,000 people or so that own Tesla just on Robinhood. But if you took that share price from $1,500, let's just say $150 or $75, you're going to see so many more people own that stock because it's so much more affordable. And that's going to go for every platform. I'm just picking on Robinhood because Robinhood users have a tendency to drive a share price up because of the volume of people trading on Robinhood. This could bring some very much needed excitement to the S&P 500. It has been devastated this year by the Roni Baloney Pony and are just now starting to creep back up into positive earnings. And we all know a flare-up of the Rona could lead us right back into the neg. Because of all the hype that comes along with Tesla, it would automatically generate interest with them going to the S&P 500 for the S&P 500 and index funds and ETFs like VOO, SPY. All these funds and ETFs would benefit tremendously just from all the attention that it would bring to them. This is what Jim Bianco had to say of Bianco Research out of Chicago. Even if you don't like Tesla and you think it's overvalued, the fact that it is going into the index would mean trillions of dollars would have some kind of position. As part of their benchmark, portfolio managers would not be able to ignore it. So whether you think the company is overvalued or not, all of these roads are leading to a higher valuation for Tesla, which is bad news for all the short sellers that are betting against the stock. I have personally been very critical of Elon Musk in the past, and Tesla for a long time I felt like they were overvalued, but I am quickly learning to stop betting against Elon. I've even been thinking about selling my own very small, modest position in Tesla because I felt like that bubble was brewing and was getting ready to pop. Mainly because of a short squeeze that kind of we're still in the middle of, meaning that people that were betting against the stock are now selling their positions because Tesla's share price was continuing to go up. They were losing more and more money. They were getting out of their positions. That was continuing to compound and drive up that share price. When this happens, you'll often see a big drop off. But, and that's a big but, we're talking about Tesla. It is hard to bet against Tesla and Elon because all they do nowadays is surprise people. Because just when you think that bubble is about to pop, sending that share price tumbling down, they're probably going to go and do something like get included in the S&P 500 or split the stock, maybe both, and that valuation and that cap continues to go up. If they don't have positive earnings this year, what happens? Well, their S&P 500 chances go away. I think that if it's announced they're not going to get in, I will think you will see that share price come down some because some people is going to get out of it. Just because I think it makes it more volatile than it already is. I do think getting to the S&P 500 makes people feel better about the volatility of the company. But I do think some people would get out of the stock. If they don't make the earnings and they don't get into the S&P 500, I think the option for the stock split is always there on the table. I do think the share price will probably come down some. There's a lot of people that have watched this thing surge this past year and are probably just going to hold. People like Ron Barron believes that in 10 years that it could be worth $10,000 a share. There's other folks that believe that it could be worth even more. And so I think a lot of people will hold, but there's a lot of investors that were counting on this getting into the S&P 500. So I believe they'll probably pull out. So the potential's there for the share price to fall. I don't think it'll fall. I don't think you're going to see this thing go back under $1,000 anytime soon, but only time will tell. That's all I got, folks. By all means, please like and subscribe to the video. And on that note, I am going to get out of this hot car and go have an adult beverage. I know it's 6:30 in the a.m., but I'm on vacation.